Well, now December, as you know, has been one of the most volatile series of 2014, with the Nifty oscillating 1,000 points from the top to the bottom and then a sharp recovery. It has currently lost 3% this series, but the Bank Nifty has been resilient. How will expiry pan out in these crucial minutes, and what does it tell us about the January series? To answer all of these questions, we're now joined by Siddharth Pambre of Angel Broking. Good afternoon, Siddharth. What do you make of how we're ending the December series? And let me ask you the question we put in the introduction. What does this tell you about the January series?
Good afternoon, Menka. We were of the opinion sometime back that 8180, 8200 is what we are expecting. But we had change in the sense we had given up on the view few days back when market was trying to move above 8350 odd levels, and now what we are seeing is 8,200 is quite likely for today's session. There are a lot of activities which have happened in 8,300 call, 8250 put, which Anuj was mentioning some time back. But not many people have given much attention towards 8,200 put. And it is not just important to see what happens on last day, but overall in this series what was happening in strike prices throughout the month. And we have observed that there was good amount of buying which was done by FIIs in 8,300 put option. And that time the premium prevailing was around 40-50 odd rupees. So for them to make money, and they're still holding those positions, we have not seen any unwinding in those put options. So for them to make money in those put options, market should close below 8250 odd levels, at least break even point, and they'll make some money out of it. So I think we will in the fag end move towards 8,200. That's what we are assuming, though we are not very confident about it, what we were like last time. But if I look at the Jan series, we are not very optimistic. We are not seeing this market immediately in first half of Jan series going above 8450 odd levels. In put options, we are seeing built up happening in deep out of money strike prices, and again stronger hands are active over there. IVs of calls are higher than IVs of puts, which clearly suggests the sentiments that people are still willing to buy this market on dips rather than think of shorting this market. In this entire fall, shorting has not taken place. People have just squared off their longs and they are buying again. So there is a complacency in market that this market is not going to correct beyond say 5-6%. Liquidity indicators, there is whatsoever no bounce back which is seen in crude oil, and which has been the main reason why globally we have seen so much of uncertainty. So as long as Brent crude doesn't move above 62 odd levels, we are not thinking of buying this market. Though in yesterday's trading session, FIs have bought 1,400 crores of index futures. Now this can be a confusion, because last time, if you remember, beginning of December series, also 2 days FIs were net buyers in big way in index futures, but we all know how December series panned out. So we are not optimistic, at least in first half of Jan series.
Siddharth, hi, good afternoon. What about the Bank Nifty, which has been clearly the more resilient one, and in fact just 2 days back was nearly at all-time high?
Yeah, Anuj, I acknowledge the fact that it's near its all-time high, but then that momentum is not there even in Nifty. In fact, just Nifty 10 days before was at all-time high, but we saw the correction. So I won't give too much of weightage that it is at all-time high, so it may not correct. But what we are doing is, instead of suggesting shorting in Bank Nifty, we are suggesting at higher levels shorting Nifty or buying put options of Nifty, because put IVs are lesser than call IVs. But in Bank Nifty, what we are seeing is the components of Bank Nifty are showing varying trend. HDFC and HDFC Bank, HDFC is not part of Bank Nifty, but these two stocks are showing strength, whereas we are seeing that ICICI Bank, Axis Bank are exhausting at higher levels. So shorting ICICI Bank, Axis Bank is advisable. HDFC Bank has a good weightage in Bank Nifty. So either you form a pair where you go long in HDFC Bank and short ICICI Axis, or you go short in ICICI Axis and long Bank Nifty. But a clear trade in Bank Nifty is not emerging for us. So our biasness remains negative, and that's the reason we won't go long in Bank Nifty as well.
Okay, what about high beta names and today's trading action? Would you read too much into this? Unitech, JP Associates, Ashok Leyland, all these high beta names surging 5 to 6% in trade?
No, I won't read too much into it. It is quite possible that a day after expiry also such stocks give you momentum. But then these are not stocks where you can make any positional gains if you trade. Even with stop losses in place. So I will not get into mid caps, especially these tainted names at this point of time, and stick to large caps. Shorting also, we are very particular that we will suggest shorting in Nifty and in large cap stocks. Mid caps, even if there are a lot of mid cap stocks where we have an opinion that they might correct significantly, but we won't initiate shorts there.
Okay, so what stocks are looking good to you, Siddharth, in terms of rollovers? There's Tata Motors DVR with 81%. There's HDIL, which has seen high rollover. But anything that stands out for you in terms of high rollover?
Anuj, only seeing rollover figure might be, not a right way of seeing it, because sometimes high rollovers.
Okay, even if you compare it to the roll cost, if you could tell some of the stocks that look interesting to you.
There are a lot of parameters which one has to see that, if roll cost is high and, there are a lot of rollovers are happening. So people assume that this is long rollover which is happening, correct? Now, only because people are rolling long positions, that doesn't mean even I have to, go long in that stock. So if I, put our parameters into place, we see that rollovers this time in terms of absolute open interest, mind you, beginning of December series, we were mentioning that rollovers are quite high on the higher side. 13 months high, and that's the reason long unwinding would set. To our surprise, despite market correcting, Nifty rollover, Nifty open interest is higher than what December series began with. November series end with. So this suggests that still there are too many long positions. People have still not given their long positions, and they are anticipating market to bounce back. Same thing we are seeing in stocks also. Stocks corrected mainly because of long unwinding, and now again we are seeing formation of long positions. So I would suggest not to get too carried away by high rollover figures in some of the stocks. And get carried away by that and form long positions. It can be a no trade zone for us where we are not confident whether this market would immediately correct or not, but certainly we are not suggesting to go long in this market.